RDTE stands for Roundhill Russell 2000 Covered Call ETF. This fund is designed to deliver high income by writing weekly covered calls on the Russell 2000 index, which includes small-cap companies across the United States. RDTE launched in the year 2023 and has quickly attracted attention for its aggressive weekly yield, often hovering around 16% on an annualized basis. But does that make it a smart long-term buy? Let's break it down. First, let's talk about what the fund actually holds. RDTE does not directly buy all 2,000 stocks in the Russell Index. Instead, it uses futures contracts to get exposure to the index that keeps things liquid and efficient. On top of that, RDTE sells one-week call options on the index futures to generate income. This is known as a synthetic covered call strategy. Unlike traditional funds that pay dividends quarterly or monthly, RDTE distributes its income every single Friday, making it one of the rare ETFs that truly pays weekly. Now let's talk about the income. RDTE's weekly payouts have ranged from about 7 cents to 9 cents per share. Multiply that by 52 weeks and you're looking at around $3.50 per share per year. At a typical price of around $20 per share, that gives you an annualized yield close to 17%. That's extremely high compared to traditional dividend ETFs, but remember, this yield comes from options premiums, not company earnings. That means there's risk. The more volatile the market, the more income RDTE can generate, but also the more NAV can drop if the underlying index falls. NAV erosion is the biggest concern here. Since RDTE is selling calls weekly, it caps its upside. So when the Russell 2000 rallies hard, RDTE doesn't capture the full gains. Meanwhile, when the index drops, RDTE absorbs those losses. That leads to gradual NAV decline over time if the market doesn't stay range-bound. This is the cost of generating weekly income. In terms of tax treatment, most of RDTE's income is classified as return of capital. That's good news for deferring taxes, but also a signal that the income is not from dividends, just from the fund selling options. You're essentially getting paid back your own money, though in a very structured way that works for income-focused investors. My meter rating starts with income, which scores a perfect 10 out of 10 for frequency and yield. Sustainability gets a 6 out of 10 because long-term NAV decay is likely. And NAV stability gets a 5 out of 10 due to the small cap exposure, which is naturally more volatile. Tax efficiency earns an 8 out of 10 for return of capital classification. Overall, my meter rating for RDTE is 7.2 out of 10. If you have any videos you'd like me to cover, say it in the comments below and I will break it down in plain English.